Welcome to Simple 401k Management, brought to you by the Kolbe Market Timers. Our market timers will help you protect your retirement and beat the S&P 500 over the long term. We use two investments and rebalance about 3 times per year. You have a 401k, you have to manage it yourself, you're not an expert. What are you supposed to do? What if an unbiased expert told you what to do and when? And the advice was simple to understand and free. Would you want to try it? Kolbe Asset Management offers 3 market timers for 401ks, for IRAs, and for the TSP, the Thrift Savings Plan for government employees. Our market timer tells you when to get out of stocks and when to get back in. We help you manage your account with simple instructions, which could greatly improve your performance compared to doing nothing. So let's look at an example here. This is a 30-year period. This is our research study. The red line is the S&P 500. The blue line is the 401k timer, which trades the S&P 500 and cash. So it goes in and out of stocks, basically. So if you look over the 30-year period, at the end of the 30-year period, the 401k timer nets 40% more money than just buying and holding the S&P 500 by itself. So by making about 3 trades a year, you can greatly improve your retirement savings. It's important to note that we got this great performance by using just those 2 investments and rebalancing about 3 times a year. Our market timers' complicated calculations look like this, but we send you a simple email that looks like this on the right. We'll show you what allocation to put into the S&P 500 index fund and what allocation to put into the stable value fund or cash. We also include investor risk tolerances. You can take our questionnaire to find out what kind of investor you are to make sure you're in the proper allocation in your 401k. For an example of how this works, just keep watching. But if you want to lower your stress now and sleep better, try our timer for free by going to kolbeassetmanagement.com/401k timer. The website once again is kolbeassetmanagement.com/401k timer. Just a little background on Robert W. Kolbe. Created the market timers. He's been a chartered market technician for over 50 years. He's written 2 books on technical analysis. He's taught at New York University and New York Institute of Finance. He's been featured in Forbes and the Wall Street Journal. You get the idea. He's an expert in this area. Let's look back at the 2008 bear market. The S&P 500 hit a high of 1565 in 2007, and then we went through the bear market and hit rock bottom there at 676 in 2009. That was a loss of nearly 57%. If you did nothing, you had to endure a 57% decrease in your 401k plan. And if you look straight across from October 2007 to April 2013, you're back where you started from, so your gain over that period is 0%. 0% gain for 5.5 years. 0% for 5.5 years is not going to help a lot of people's retirement planning. If you use the 401k timer, there was a sell signal pretty early in 2008, so we got out of the market there, and the market continued to go down. If you were using the 401k timer, you didn't panic on the way down. You didn't panic at the bottom. Then there was a buy signal in 2009, probably well before other people had confidence in the market. And then we rode this back up. There were a couple of other signals, sell highs and buy lows along the way. But if you use the 401k timer over the same time period, from October 07 to April 2013, your gain would be 56% versus 0%. That's 56% for 5.5 years versus 0. And that is something you can use to help you have a better retirement. The 401k timer in this instance bought back in at a point 25% lower than when it sold. We've always heard buy low, sell high in investing. Here's a great example of how to do that. And that's what leads to this outperformance that we talked about earlier. The Kolbe Market Timers help lower your stress. They help you sleep better. Get the Kolbe 401k timer today at kolbeassetmanagement.com/401k timer. That's kolbeassetmanagement.com/401k timer.